Hello traders, Gary Wagner here. It is 2:30 in Honolulu, 7:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 14th day of February 2025, and this is the evening report for gold and silver, our weekend review. An interesting week in gold, where gold finished higher on the week, up $7.60, but dramatically lower on the day, with April gold declining by $63.50, which is a net decline of 2.15%, taking a troy ounce of April gold to $2,893.70. Gold was aided on the week and on the day by a falling U.S. dollar. Today, the dollar lost 0.26%, and over the entire week, the dollar lost 1.19%, taking the index to 106.685. All week, we have been focusing on the last 7 consecutive weeks of trading, which have all resulted in green candles, meaning Friday's close was above Monday's opening price. While today we did see gold continue that trend of a green candle, we can identify this week's candlestick as a shooting star. A shooting star can be identified with the following criteria. After a defined uptrend, you get gold opening close to the closing price, trading to an extremely high intraday high during the week, $2,971, and then closing on Friday very near the open of Monday, which is why candlestick patterns and individual candlestick types have a naming convention which closely matches how a candle or pattern looks. The fact that gold is traded on a weekly basis to higher closes for the last 7 consecutive weeks is significant. The fact that the terminating candle was a shooting star was also significant. But what startles me the most about the occurrence of 7 consecutive higher closing prices on a weekly gold chart is the rarity of this occurring. The only other time I have seen gold trade to 7 consecutive higher closes on a weekly basis was back during the run-up of 2011 that took gold to an all-time record high above $1,900. What makes it more significant is the fact that after gold had 7 consecutive higher closing values, gold sold off very hard from about 1900 to 1800 and traded within this defined trend until 2013, when gold entered a multi-year correction, taking it to a low of $1,020. So the question becomes whether or not 7 consecutive weeks, which is what we have currently seen in gold, will have a similar outcome to what occurred last time that gold traded to 7 consecutive higher highs and higher closes. We will have to wait till next week to determine the answer. This has been Gary Wagner
and Joseph Wagner.
wishing you as always good trading.
We will talk to you again next week. Bye-bye.